All right, Calgary, buckle up because this market just took a turn. If you've been watching my updates for a while, you know I don't sugarcoat things, whether the market's climbing or diving. I tell it to you straight. So let's dive into the full June 2025 Calgary real estate breakdown. But let me start with a stat that should make every single homeowner in the city perk up. Inventory is up 83% year over year. And yes, you heard that right. And yet prices, they're not free falling. They're adjusting. They're retreating in some areas, but they're not crashing. Now, the question on everybody's mind, is this a start to something bigger? And the short answer, it actually could be, but let's break it down. Let's look at the big picture. What happened in June? Sales, we saw 2,286 homes sell, down 16.5% from last year. Inventory is almost at 7,000 homes on market, and that's a massive 83% increase. New listings are up 11% year over year, and the benchmark price is at $586,200, which is down 3.6% year over year. Months of supply just reached over 3 months, which is more than double last year's level. But let me put that into context. In early 2023, buyers were in bidding wars for homes that looked like they'd been staged by someone's blind cousin. Now, buyers are more cautious, patient, and they have options, and that's a huge psychological shift for everybody. But before we assume that this means the market's falling apart, let's look at the different market segments, because not every product type is reflecting the same way. Let's start with detached homes, the blue chip of Calgary real estate. Sales were just shy of 1,200. The benchmark price is at 764,300, and the year-over-year price change is just down by 0.4%. But this is where things get a little tricky because inventory is up by 75% year over year. Months of supply is at 2.6 months. But what does this all mean? We're now officially in a balanced market. Not a buyer's market, not a seller's market, just stability. But don't let that word fool you because there are some clear trends that are emerging under the surface. City Center and Northeast districts saw the steepest sales drops, over 20% year over year. These are also areas seeing price declines. The Northeast is down over 4% in benchmark prices from last June. Why? 2 reasons. These areas had a ton of demand during the peak, and now that demand has softened while supply is piling up, and especially with those new builds. On the flip side, West Calgary and the Southeast are still seeing some very strong sales volumes and price stability. Those areas are absorbing supply way better, and a lot of times that just has to do with stronger schools and the lifestyle appeal. Bottom line, if you're holding a detached property, you're in the strongest position of any seller segment right now. But overpriced homes, they're sitting. Buyers have choice now. You don't get to throw a listing up with an iPhone photo and expect multiple offers anymore. You need a proper marketing package, and you need to be priced well, or you're gonna sit for a very long time. Now let's talk semis. 212 sales, the benchmark price is just under $700,000, and the year-over-year price change is up 1.5%, but the inventory is up 86% from last year. Months of supply is just over 2.5, and here's the twist. Oh my God. Twist! Despite all the added inventory, semis are still slightly appreciating. Why? Because there is a growing buyer pool that can't afford detached but wants more than a condo. These homes hit a perfect middle mark, and that middle is still competitive, especially if the product is right. But the growth is definitely slowing, and in some districts like the North, Northeast, and East Calgary, prices are really rolling over. Some of those areas saw a 2 to 3% drop year over year. If you're buying a semi, be choosy and take your time. If you're selling one, especially in the outer quadrants, you'll need to price to the current market and not the peak. And for investors, don't expect double-digit rent bumps that we saw back in 2023 to carry your cash flow anymore. You should be planning for rents to drop a little bit more before seeing any stability. All right, if you've made it this far, you clearly are into this content. So do me a favor. Hit the like button, helps more people see this. And if you want more straight to the point real estate insights without the fluff, make sure to subscribe. I drop videos like this often, very often. I'd actually drop it more if I had more subscribers. So thank you for subbing. Townhomes were probably one of the best selling structure types in 2023. They were affordable. They were that perfect workaround between detached, semi-detached, and not quite a condo. But in June, they hit an absolute wall. There were only 348 townhomes that sold in June. The benchmark price is down 3.1% year over year, down to 450,000, and inventory is over 1,100 units, and that's 137% higher than June of 2024. Months of inventory is quickly approaching 3.5, and if you want to see what a shifting market looks like, this is it. Buyers here now have countless options. The sales to new list ratio is just 50%, which means inventory is rising faster than it's being absorbed. And just like semis, the pressure is district specific. The Northeast benchmark price is down 5.75%. Calgary North is down 5.71%. City Center is only down 0.1%, but if you are selling a row home, know your quadrant, and again, don't overprice. You're only gonna get punished. This is also a structure type that we're seeing a ton of investor fatigue and stress. Units bought back at the peak prices with floating rate financing, they're bleeding cash. And when owners go to sell, they're often shocked to find that they're underwater. Now for the big one. Apartments were the darling of the affordability crisis. They were also the focus of much of the investor frenzy in 2022 and 2023. And now we're finally seeing the downside of that. Sales are down 33% year over year. The benchmark price is down 3.25% and inventory is up 73%. The months of supply is about to hit 4, which is dangerously close to a full-blown buyer's market. And let's be very clear, this is not a collapse, this is a long overdue correction. A lot of investors who rushed into the condo space thinking they'd Airbnb their way to early retirement are now realizing the math doesn't math. Interprovincial and international migration has cooled slightly, and supply has absolutely exploded, and interest rates are still a little sticky. Even the pre-construction units from 2 years ago are now hitting resale with price tags 5 or 10% below what buyers paid. This downward price stat has hit every single quadrant. The Northeast condos are down 6%, the Southeast condos are down 6%, City Center is down just 3%, and it's still one of the most resilient condo markets, but we're definitely seeing inventory stack up. So what's the deal? Well, if you're a buyer, this is your chance. You've got leverage, and there are a ton of motivated sellers. If you're an investor, be very selective. Don't chase yield blindly, chase product market fit. Downtown 2-bedroom with parking, still competitive, but cookie cutter 1-bedrooms in oversupplied towers, you're fighting 30 other listings. If we zoom out and we look at Calgary by district levels, the city center is still holding a line. Benchmark prices are just shy of 600,000 and they're up 3.5%. West Calgary is still a very strong market. We're seeing benchmark prices at 720,000, which is up 5.3%, and I do not see this dropping very much over the next year. The Northeast is absolutely struggling, and that hailstorm last year did not help. It's completely under pressure, and the benchmark prices are now down below 500,000, which is down 6.3% year over year. The story here is pretty straightforward. If you're in a mature, established community with limited new development, you're gonna hold your value. Newer, outring communities with lots of construction and spec inventory, this is where the correction is going to be focused. So again, this is not a citywide collapse, this is a segment reset, and the smart buyers and investors can take advantage of that. All right, so let's address the investors because I know you're here. Yes, the party has slowed, but the fundamentals have not gone anywhere. Rental demand is still strong and vacancy is low, but it is climbing. Cap rates are compressing again, and this is where you need to sharpen your pencil. Use 5.5 to 6% financing as your base case. Don't assume rent increases and watch for condo fees. They're killing condo cash flow in some buildings. You need to be looking for minimum 2-bedroom layouts, dedicated parking, buildings with low turnover, and good reserve funds. Ideally, there's tenants in place paying market rent, and honestly, it might be time to start hunting for distress. There are a ton of out-of-province, over-leveraged investors who bought back in 2022 with a floating rate mortgage, and now no plan B. They're coming to the market now, and some of them will take a haircut just to get out. This is your window, but you need to know where to look. For the sellers, if you're thinking about listing this summer, here is what you absolutely need to know. The frenzy is kind of over. There's not as many list Friday, sell Sunday with no conditions. Buyers have a choice and they're taking their time. Photos, video, staging, and price matter more than ever. Overpricing is a death sentence, especially in condos and townhomes. Your listing needs to look sharp and feel sharp. Otherwise, you'll sit, and then reduce, and then sit, then probably reduce one more time, and then one more time, and then you'll sell. Probably. A lot lower than what you originally listed for. But don't get it twisted. If you're in a great location, priced well with a clean product, there's still demand. Homes are still selling, but you have to earn it now. Buyers, the window is open for now. If you are a buyer, this might be your moment to breathe. We haven't had over 3 months of inventory in over 2 years. And while the rates haven't dropped like many hoped, including myself, you now have the leverage in negotiating, especially for condos and row homes. I'm seeing more conditions, more flexibility on price, and in a lot of cases, actual deals. Use this time to shop smart, don't rush, but when you see the right opportunity, act. Because if the rates do drop and fall, buyer competition could increase fairly quick. And yes, I still believe that Calgary is one of the strongest long-term plays in Canada due to lifestyle and affordability when compared to the rest of North America. So what do I think is going to happen in the second half of 2025? Well, honestly, we're entering a balance phase in Calgary real estate. This inventory increase is giving the market room to breathe. Buyers need options. Sellers needed to recalibrate, and the investors needed a wake-up call. We've had 4 years of price growth. This correction isn't just expected, it's necessary. And it's not erasing gains, it's normalizing the pace. So are prices going to keep falling? In condos and townhomes, probably a bit more. In detached and semis, not unless inventory spikes again or rates stay high through 2026. But this isn't 2008, this isn't Toronto in 2017, this is Calgary, and we're just returning to balance. But if you're serious about making a move, buying, selling, or investing, now's the time to have that real strategy conversation. Not a what's the market doing, but how do I win in this version of the market?